Welcome. Since you have invested in crypto coins and/or tokens, you are familiar with the blockchain concept. You are at the forefront of a worldwide game-changing movement, which lately has morphed into NFTs and the metaverse. Throughout the world, governments are struggling to define crypto assets. Different governments throughout the world define crypto assets in terms of traditional assets like money, property, a commodity, or an unregulated asset class. Recently, the United States has subjected crypto assets to what some have called the draconian reporting requirements for cash transactions, with severe penalties for violations. In our written article, we have excerpts from an article by Simon Chandler of Cointelegraph, which details how governments worldwide are working with the classification of crypto assets. In the first two videos of our crypto asset series, we introduced you to our firm, EWP Financial. This video focuses on three important questions that our most sophisticated investors ask us. These three questions pertain to any asset class and are very pertinent to crypto assets. It is our hope that the answers to these three questions will give you the assurance to place your own holdings into this simple, straightforward, and very powerful asset structure, an EWP asset structure. This is not the entry to an EWP asset structure. Is it legal? It seems every few months there is another revelation of a tax dodger avoiding taxes. A recent newspaper headline reads, "The IRS reels in a whale of an offshore tax cheat and goes for another." Is an EWP structure just another one of these schemes? The answer is no. Our EWP structures have existed since the early 1990s with no issues of any kind, either from the IRS or the families who have successfully employed these asset structures. These menacing robbers won't steal your money. Can they steal my money? Again, the answer is no. Why is this so? Because all your assets are held in separate accounts by a trustee. This is a similar arrangement to having a trust account at a bank. The bank becomes the trustee of the asset, but the ownership does not change hands. You retain ownership of all the assets held in an EWP structure. On the audit question, audits can be triggered randomly or for a variety of reasons. EWP structures are designed to comply with all aspects of tax law worldwide. To begin our motorway analogy, where are EWP structures positioned on this motorway? The fast lane is for those drivers who are the risk takers, traveling at ever faster speeds until the inevitable occurs. In the slow lane are those drivers who wish to travel at a leisurely pace. In the middle lane are those drivers who wish not to be the fastest on the road or the slowest. In the universe of financial planning tools, EWP structures are traveling in the middle lane and do not attract undue notice from tax authorities, and thus are not a likely candidate for an audit. In our next video, we explore in depth the 6 principles of expanded worldwide planning, or EWP for short, and why Wikipedia discusses them in their article on international tax planning. These 6 principles are at the core of any properly designed EWP asset structure and explain why private placement life insurance is best suited to protect your crypto assets from evasive government regulation and taxation. If you found this video useful, please give us a like and click on the subscribe button. We look forward to connecting with you in episode 4 in our crypto series. Thank you for watching. To learn how the wealthiest families in the world conduct their financial affairs, please call 1-530-692-1007 or email us at info@expandedworldwideplanning.com. At your convenience, we can arrange a call to discuss how our unique blueprint can vastly enhance your asset structure. The opinions expressed in this video are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual on any financial structure, investment, or insurance product.